When it comes to trading, there are some really uncomfortable truths to trading that a lot of people just don't want to accept. And that's the topic for today's video. Today, I want to share with you 3 trading facts most traders refuse to accept. Ignore these at your own peril. First up, you must accept that you don't know anything. And this is very difficult. This is probably the most difficult thing for traders to admit, is the fact that markets are random. Everything's unpredictable. You can't predict anything with the market. And that's what I'm talking about when I say you don't know anything. I'm not saying you're not educated how economics or finance works. You know the ins and outs of, the stock market and the global financial system, the banking system. You could be educated in all of that stuff. But that is not what I'm talking about. I'm talking about being able to predict markets. You can't predict any market. If there was a way to predict any market, that market would be incredibly inefficient. It would be easy for anybody to game it. And, it's just not something that is possible. Technical analysis is all bullshit. It doesn't work at all. It never has. And I know most people don't want to hear that. Many traders have bought into the whole technical analysis scam from many of the fake trading gurus on YouTube. It is all complete and total bullshit. Technical analysis does not work at all. Financial analysis is also bullshit for most types of trading. For short-term trading, the kind of trading I do, it's pointless. For really long-term trading, for long-term passive investment where you're just buying and holding shares of stock for 5 years, 10 years, 20 years down the road, yeah, financial analysis might have some benefits for you to go and check the fundamentals of a company that you basically are going to hold on to potentially for decades. It might have some benefits. I'm not saying it definitely does, but it's possible. For short-term active trading, though, I know financial analysis is a complete waste of time, because in the short term, financial analysis, again, it will not help you predict anything, because especially in the short term, markets are random. You have no idea where anything is going to trade up or down in the short term. As a trader, you have to understand you can't time the market, right? You can't perfectly call bottoms or tops. That's not possible. That's not possible for you. That's not possible for me. That's not possible for anyone, because again, markets are random. You can't predict anything. Not only do you not know anything, neither does anyone else. This is something you also have to understand, is when I say you don't know anything, I'm not trying to insult you. Literally, no one knows anything as far as being able to predict the market. So one of the things that I see people do is they base trades around following the crowd. Whatever everybody else is doing, I'll do that because they must know something. No, they don't know anything. They know as much as you, which is nothing, right? The same thing with financial media, financial news, articles, and network financial television. It's all complete guesswork on these people's parts. These people that are talking about where things are going to trade in 6 months or a year, this stock is going to double in price in the next year, and this stock is going straight to zero. They don't know anything, right? You and I know as much as those people on Bloomberg or CNBC. Again, at the end of the day, you don't know anything, and neither does anyone else. Also, when it comes to following the crowd, you have to understand most traders lose money over time. Most traders are not profitable traders, right? Like 95% of the people trying to trade are going to lose their money. So why are you trying to do what everybody else is doing, right? Stop trying to do what the public is doing, because if you follow along with the crowd, that is a guaranteed losing strategy, because the crowd as a whole typically loses money. The second fact you need to accept is you need to accept that boring trading is profitable trading. Profitable trading must be boring. It should be consistent and repeatable. It should be a consistent and repeatable process. It's a thing that you do over and over and over again, right? It's just the thing you do each and every day over and over and over again. You're going to make thousands, tens of thousands, potentially hundreds of thousands of trades in your trading career. Naturally, that's going to be a very repetitive, boring thing, right? Because trading, guess what? It's not a game. Trading isn't a game. It's a job. But many people play trading for fun, right? Stop playing this thing for fun. Trading should never be exciting, right? It should never be some kind of adrenaline rush or dopamine rush. Excitement equals gambling or gaming. And remember, trading is not a game, and it's definitely not gambling. Successful traders are never, ever super excited by huge wins or bummed out by huge losses, because real traders, successful traders, people that have been in the game for a long time, the occasional big win or the occasional big loss, that's all part of the game. It's actually all part of the plan, because when you back test things and when you understand how certain strategies work, you understand you're going to have some winners, some losers, some percentage of winners and losers, and some percentage of really big winners and some percentage of really big losers along the way. Everything is all part of a grand plan, so you're never super excited or super bummed out by the big wins and big losses. If you ever see a trader that is very excited about trading, beware, right? Beware of that trader, because that's not somebody that has been in the game for very long. They probably don't really know what they're doing. If you see, especially a super excited trader on video, say on YouTube or on TikTok, that's almost certainly a fake trading guru, and they're probably trying to sell you a dream. And the third and final fact that you must accept is you must accept that sometimes the trade beats you. Sometimes the stock wins. If you're trading stock or if you're trading options on stocks, I buy a call or sell a put or whatever it happens to be, sometimes the underlying stock wins. In other words, it makes a huge move against you. That's going to happen. That's always going to happen. You can't win 100% of the time on any trading strategy. That's simply not possible. If somebody tells you that's possible, they're full of shit. That's a fake trading guru, and they're trying to scam you out of money. Sometimes you're going to lose because markets are random. Because markets are random, you should expect the unexpected, right? If you know going into each and every trade that the unexpected could happen, well, you should always then consider what happens if the trade goes against me. Hopefully you have a plan so you know what to do next. If you go into a trade and you don't plan for the unexpected, that's when things go horribly wrong. That's when a trade really goes against you in a big way and you really didn't plan for it. You really haven't considered how you would defend such a thing. You need to be prepared, because sometimes you have to defend these things. You have to defend, especially with options positions. Sometimes you have to make adjustments. You have to roll strikes up or down, roll out in time. Sometimes you have to buy or sell additional options to hedge a losing position. Sometimes you have to buy or sell shares of stock to hedge a losing position. There's a lot of different ways you can defend a trade that's going against you. But here's the thing. Defending a position is not guaranteed to work either. Sometimes you have a trade that goes against you and you defend it with various rolls. You're buying or selling additional options. You buy some shares to hedge, whatever it is you're doing. But sometimes the position keeps going against you, right? Whatever it is you're doing to help offset the loss just isn't working either. Sometimes the loss just becomes so great you have to take the L, right? And sometimes it's okay. Don't be afraid to take the L when it's time to do so. One of the things I see sometimes, especially with new options traders, is when it comes to defending trades, they had a short put that went against them, or they had a short strangle that went against them. And then they end up defending that position through rolling or making adjustments, whatever it is they're doing. And they end up in a position sometimes for 6 months or a year, sometimes more than a year, for one position that went against them. And sometimes, because of just the time cost involved, it would have been better when that position first started to go against them. Had they just taken the loss and moved on, they would have come out ahead. Even if, say, 6 months, a year and a half down the road, they fight that thing back to break even or even a small win. Was it worth it with that much time investment? Probably not. So you do have to take into account not just the dollar amount involved in a loss. You do also need to take into account the time investment, because sometimes I get into situations where I know I could defend a position, but I know that the defense of that position could take several weeks, or in some cases several months, and I don't want to be in that position. Maybe it requires a huge amount of buying power, and I don't want to be in that position, tying up all that buying power for all that amount of time. Again, sometimes the stock just wins. Sometimes, again, it's just better to take the loss and move on. So there you have it. 3 facts about trading that I think a lot of traders just refuse to accept. At the end of the day, you just have to accept the world as it is. You just have to accept reality, especially when it comes to trading. Now, if you want to learn more about options trading, please check out my book, The Super Wheel Option Strategy, which is available over on Amazon. This book is about my favorite option strategy, which is the wheel option strategy. You'll find a link to the book in the description below. Peace, guys.